do you check ETF liquidity and bid-ask spreads? Imagine you're about to buy or sell an exchange-traded fund, and you want to do it smoothly without paying too much extra. How do you make sure the market is ready for your trade? Well, first, you need to look at two main things: how easy it is to buy or sell the actual stocks or bonds inside the ETF, and how active the ETF shares are on the exchange. The first part, the underlying securities, depends on how liquid those assets are. If the stocks or bonds the ETF owns are traded often and in large amounts, market makers can quickly create or redeem ETF shares. This helps keep the ETFs trading smooth even if the ETF itself isn't traded every day. Next, check the ETF's trading volume on the exchange. If it has a high average daily volume, it means many traders are buying and selling, which usually makes it easier to enter or exit your position. But volume alone isn't everything. You also want to look at the bid-ask spread, which is the difference between the highest price a buyer is willing to pay and the lowest price a seller is asking. When the spread is narrow, say a few cents or a small percentage of the share price, it shows the ETF is more liquid and costs less to trade. If the spread widens, it can mean less liquidity or higher trading costs. Another thing to consider is implied liquidity. This is the potential liquidity based on how liquid the underlying assets are. Even if the ETF's trading volume is low, if the stocks or bonds inside are very liquid, market makers can still efficiently create or redeem shares. When you're trading ETFs or options on ETFs, always look for those with narrow bid-ask spreads because it reduces your trading costs and slippage. Check both the trading volume and the liquidity of the underlying securities. Use real-time quotes from market makers to see current bid-ask spreads. If you're planning a large trade or using option strategies, it can help to contact the ETF's authorized participants or the company's capital markets desk. They can give you a clearer picture of how easily you can buy or sell the ETF without impacting the price too much. By understanding these factors, you can better manage your transaction costs and avoid surprises when trading ETFs. Remember, a combination of high trading volume, narrow spreads, and liquid underlying assets generally makes for a more efficient and less costly trading experience.